Hey guys, this is Mark Shawson, the Pattern Trader. Recently, John sent in this review and posted it on our review website. John said, "The Pattern Trader has turned my trading experience around dramatically. No more robot trades or any short-term time frames. Nobody gets it right in this business all of the time, but Mark has proved to me that his method is the best, with a high return on capital invested and with only a risk of 1 to 2%. So when John says only 1 to 2%, I typically advise our members to place even lower than that, between a 0.5% risk of your overall account balance to 1% risk on any given trade. And that way, it's very difficult to blow out your account. So the industry and the statistics are very bad. It's estimated that over 90% of traders are blowing out their account within 3 months or less. And if you risk a 0.5% or 1% on any given trade, it's very difficult to do that, especially with my trading methodology. So John goes on to say, try it, stay with the rules, and you'll be very glad you did. And yeah, that's what it's all about, staying with the rules, because I'm going to be the first one to admit this month, October, has been a extremely difficult month. Even though I saw the move short dollar yen, even though I saw the long-term moves in pound versus Australian dollar on the upside and pound versus New Zealand on the upside, those trades are now taking off. But during the month, these trades have been extraordinarily difficult to catch due to the background noise, especially regarding the British pound correlated trading pairs. In the UK, you had a high incidence of COVID, and before the recent election, there was a great deal of uncertainty regarding Brexit. And because of that, even though I knew pound New Zealand was going to go higher, even though I knew pound Australian was going to go higher, you had incredible churn. These pairs would go up and down 200-300 pips every other day and would not go in a consistent direction. But in a moment, I'm going to show you that if you keep your eye on the governing price pattern. So to my mind, a market doesn't pick a direction. A market doesn't start to take off in a direction before it puts on a preceding price pattern. Once you understand the price pattern, then you can understand the direction, and notwithstanding any kind of churn or any kind of misdirection that's thrown at you, you will be able to understand it. And frankly, unless you understand the big picture, it's unlikely you will succeed, because the market is always going to throw curves at you. It's kind of like a magician. He doesn't just come on stage and pull the rabbit out of the hat. He always does some misdirection. He has you following his left hand while he's pulling the rabbit out of the hat with his right hand. And that's precisely what the market does. The market shows you a direction, and then it looks real easy, and then it creates all kinds of havoc and misdirection and throws you all kinds of curves. And by the time you're done with it, you're burned out, you've lost some money, you're tired, and then you do some revenge trading. And then when it takes off, you just sit back and you're not even there for it. So this is what frequently happens. So I admittedly had a drawdown in October. I was down almost 10% in my account, but now I've got 3 trades on. One long Australian pound versus Australian dollar, one long pound versus New Zealand dollar, and one short dollar versus yen. And just in those 3 trades, I've made half of those account losses back already. And I don't think those trades are done. And I think that by the end of the month, I could be in the plus. So it's not your winners that dictate your outcomes. So people think, if they have a great deal, a great number of winning trades versus losing trades, they're going to have a positive outcome. That's really not the way I trade. To me, it's the quality of my winners versus the quantity of my losers. So I have lost a great number of trades this month. I just pack it in. I lose a 0.5% here, 0.5% there. So that way I could lose 10 trades and lose 5% of my account. And then on 3 trades, I could make 15% of my account. So I could have a 30% win-loss percentage ratio and still come out to the upside. And this is what it's all about, being a consistent trader over the long term. It means you don't take the swings on the short bets. You don't take huge cuts at the market. You don't bet 5 or 10% on any given trade. And this is the way, in my mind, that you come out to be a long-term consistent winner. So now I'm just going to flip real quick to show you the charts that I'm looking at, show you the underlying price patterns that to me always indicated where these pairs were headed, notwithstanding the churn. And so I'm going to go to the short-term charts, show you what I'm looking at. Before I go to the real-time charts, I just want to share with you very quickly an email that I sent to our worldwide members on October 18th, just a few days ago. I labeled my email Pound versus Australian Dollar Stake in the Ground because what I was looking at was a combination of this double bottom price pattern. I'll go to the real-time charts in a moment, show you what I'm talking about. And then there was this one standout, what I call key reversal, where during that day the market made a huge low, and then by the end of the day it recovered and closed at the high of the day. I said to our members that this was likely a stake in the ground, that this was an insurance bar, meaning that all of the risk to the downside had been taken out by virtue of that key reversal. And you can see at the time, pound versus Australian dollars was trading about 182.01, where I recommended putting a buy stop. I talked about the double bottom on both the daily and the weekly time frames. And I said sometimes the market just points to where it wants to go. I even made a little bit of a video describing what I was looking at the time. But I said penetration above the key reversal high price could result in a turbo thrust to the upside. So that was a few days ago in the pound versus Australian dollar when it was trading under 182. Now I'm looking at the real-time chart of the pound versus Australian dollar on a daily chart, which means each one of these price bars represents one 24-hour session. And you can see, since I recommended entering the market at 182.01, that pound Australian dollar has lifted off and is now up over 265 pips since I recommended our members enter that order at 182.01. Now, the reason I was recommending that was a combination of things. First off, for me, it always starts with an underlying pattern. And even though it doesn't look like it, this is kind of an asymmetrical double bottom. The bottoms don't have to be at the same low. But what happened was the market came to a low, it bounced off the low, it retested the low, and once it comes through the neckline, it basically confirms this double bottom. You can see this huge W bottom, and with the word bottom in it, to my mind, this points to where this market wants to go. Now, I look for a combination of both price patterns and price action. So I didn't wait until it got to the neckline. I started buying pound Australian dollar many days ago, frankly, many weeks ago, on the observation of this double bottom. I surmised long back here that once this started, this bottoming action started, that it would contribute to a rising market. But sometimes there's a day where all of the risk gets taken out of the market. And to my mind, this was this day where I called it a stake in the ground, where the market crashed to a low, and by the end of the day, it closed on the high of the day. And to my mind, these key reversals point in the direction they want to go. And we can see subsequent to that day, for the last 4 or 5 days in a row, pound versus Australian dollar has incrementally been encroaching higher. Now we've cleaned through this neckline, which is the final hurdle. And to my mind, in fits and starts, pound versus Australian will and should keep going higher. In this chart, I'm looking at pound versus New Zealand dollar, also on a daily time frame, and just like its sister cousin, the pound versus Australian dollar, I had the same expectations for pound versus New Zealand dollar based on the observation of this Eve and Adam double bottom. Now, it is a double bottom, but it's curiously called an even Adam because it has several pokes at one low along this continuum, and so that's the Eve, and then a single poke right there at the same low, and so that's called the Adam. But whatever you want to call it, this is looking like a double bottom. Now, the neckline or the confirmation of this emerging pattern won't be until 2002, but I am anticipating and predicting well before then that this thing is going to keep going higher. And just like pound versus Australian dollar, pound versus New Zealand dollar several days ago, put in another stake in the ground where we had this huge key reversal where the market crashed to a low. You can see that it came to a very similar low, created this interim double bottom, and by the end of the day, it recovered and closed on the high. And to my mind, these key reversals take all of the risk out of the market, because you understand by getting in here and putting your risk there that you're pretty much insured, just like Lloyd's of London, that that's not going to get taken out. And so incrementally, we see that now pound versus Australian is starting to curl around here, and I fully expect this uptrend to continue. So to my mind, it always starts, any move starts with a pattern. So you can see this double bottom with the word bottom in it. To my mind, it's not going to be a surprise if I see this kind of ensuing price action following a price pattern that indicates a bullish trajectory. In this chart, I'm looking at the US dollar versus the Japanese yen. This is a weekly chart, and anybody who's known me, or if you want to check out any of my videos online, I've basically been boring our members to death by honing in on this chart and advocating that there is nowhere for this chart to go but lower. There are so many classic bear price patterns on this chart that you consult any website, any technical analysis, pattern analysis textbook, and you can see this is the classic double top, which looks like an M top, and then in the same time frame we had this head and shoulders, which looks just like a man and woman's left shoulder. The peak is the head, the right shoulder, and then once you cross this neckline at 116, this was the governing price pattern that has governed or dictated price behavior going forward. So with the double top and head and shoulders, both of these are reversal price patterns. Both of these are very bearish price patterns. This was your trading for dummies chart pattern that said to you that following that, the market was going to continue lower. And that's what we've seen in dollar yen. Now, in the last couple of years, you've seen dollar yen trade within a continuum of this descending triangle. But you can see that every high is lower than the previous. So you can see that this has been kind of a stealth downtrend, and that we've had a common low around the 104. And you can see that with today's price action, we are re-challenging this 104. So this has been going down in a sawtooth pattern where it does have rallies, but every subsequent rally is shorter than the last, and you can see that it's starting to run out of steam, and that to my mind there's nowhere for the market to go but lower. I said as much to our members, all of our members are short dollar yen, and if you're watching this video, so should you. So when I sent out those trades to our members, I also placed those trades on a trading platform that I control. And here are the orders. I was long pound versus Australian dollar at 182.01. I was short dollar yen at 104.95. And I've been long pound versus New Zealand dollar from 196.25. And here, thus far, are the open cumulative profits around $189,000. Now, these are open profits. The profits could certainly go backwards, or as I hopefully anticipate, they will go forward. So with these profits, I've already made up more than half of my losses just on 3 trades to make up for a slew of bad trades that we've already had in October. So the month is far from over. And based on these trades and some other things I'm seeing, I believe that I will be in the plus, notwithstanding the fact that I had a slew of bad trades in the early part of the month. So I hope you got a ton of value. I hope you got a ton of input from this video. If you would like to understand a little bit more about my price action, price pattern trading methodology, and how I am able to capture and capitalize on monster moves in the market, then I highly suggest that you start with my program, the weekly video report. This comes out every Sunday. It's a detailed email along with a video in which I analyze many different markets. So I highly suggest that you subscribe to the weekly video report. this is really a no-brainer offer because I'm offering it for any price you want to pay. So you get to nominate the value you'd like to get out of this information and then click the link alongside this video. So I hope to see all of you on next week's weekly video report. And with that said, I wish you guys a healthy and prosperous trading week, and I'll see you next time.